Hello, welcome to What's Up in Business Travel, a Business Travel 360 podcast where we update you each week on what's happening in the world of business travel. This podcast is great for those that need to know what is happening, all in less than 15 minutes. My name is Ash. Let's get started. It is Monday, March 16th, and we've completed week 11 of 2026. Now, let's get to the headlines. Fuel remains one of the largest cost drivers for airlines, typically accounting for 20 to 30% of operating costs and up to 40% during price spikes. Recent geopolitical tensions, including restricted airspace in the Middle East, are forcing airlines to reroute flights, increasing fuel burn and operational costs. This combination of higher fuel prices and longer routes is expected to further compress margins and could lead to higher ticket prices if sustained. Airlines' exposure varies based on fuel hedging strategies, with many U.S. airlines having reduced hedging in recent years. Historically, such cost shocks have led airlines to cut capacity, adjust schedules, or raise fares. The U.S. Department of Homeland Security has reopened the Global Entry Program after suspending it on February 22nd due to resource constraints during a partial government shutdown. The program resumed operations on March 11th, restoring expedited customs processing for pre-approved travelers. The U.S. Travel Association welcomed the move, but urged Congress to address ongoing issues affecting the TSA workers, many of whom have gone without pay during the shutdown. Staffing shortages have already led to longer security lines at airports. While the reopening alleviates some travel friction, broader concerns remain about workforce stability and operational efficiency across the U.S. aviation security system. Boeing has identified a wiring issue on certain undelivered 737 MAX aircraft caused by a machining error that resulted in minor wire damage. Boeing is repairing the affected planes, which will delay some deliveries and potentially impact first quarter delivery totals. Boeing did not specify how many aircraft are affected, but emphasized that the issue is not expected to disrupt its full-year delivery targets. The announcement comes as Boeing works to increase production following years of supply chain constraints and regulatory limits. Despite the setback, Boeing reported delivering 51 commercial aircraft in February, its highest monthly output in recent years. IndiGo has become the first airline in India to employ more than 1,000 women pilots, representing almost 20% of its pilot workforce, more than triple the global average. The milestone underscores the airline's broader commitment to diversity, equity, and inclusion. Women now make up to 45% of IndiGo's total workforce, with strong representation across operations, finance, digital roles, and leadership positions. IndiGo continues to promote gender diversity through initiatives such as its Embrace program and Girl Power campaign. The achievements highlight IndiGo's role in advancing opportunities for women in aviation, particularly in a traditionally male-dominated field. Now in news that impacts the travel industry. Sabre has implemented a shareholder rights plan, commonly known as the poison pill, after Constellation Software acquired more than 10% stake in the company. The measure is designed to prevent a potential takeover by allowing other shareholders to purchase discount shares if any entity exceeds a 15% ownership threshold, thereby diluting the acquiring company's stake. Constellation, a frequent acquirer of vertical software firms, has also requested board representation. Sabre confirmed ongoing discussions regarding the governance, but emphasized the defensive nature of the move. The development signals heightened strategic interest in travel technology assets and underscores Sabre's efforts to maintain control amid external investment pressure. Air France-KLM will incur financial penalties after failing to meet emissions reductions targets tied to its sustainability-linked bonds. The airline group did not achieve its goal of reducing emissions intensity by 10% compared to 2019 levels, triggering higher costs for the bondholders. Factors contributing to the shortfall include supply chain disruptions, engine issues affecting Airbus A220 aircraft, and increased fuel consumption from longer fuel routes due to geopolitical constraints. As a result, Air France-KLM will pay redemption premiums and higher interest rates on portions of its €1 billion bond issuance. The outcome highlights the operational challenges airlines face in meeting ambitious environmental targets amid ongoing industry disruptions. Qantas Airways has agreed to pay a 105 million Australian dollar settlement to resolve a class action over flight credits issued during the COVID-19 pandemic without admitting liability. The case covers flights canceled between January 2020 and November 2022, where customers alleged that the airline failed to provide refunds. The settlement, nearly double the airline's earlier provision, remains subject to court approval and is expected to be paid in fiscal year 2027. Qantas noted that additional costs will impact net earnings but be excluded from underlying results. The dispute reflects broader industry scrutiny over pandemic-era refund practices, even as Qantas previously removed expiration dates on affected credits. American Express Global Business Travel reported a 34% year-over-year revenue increase in Q4, reaching almost $800 million, largely driven by the acquisition of CWT. Total transactional value rose 45%, marking the first full quarter post-merger. Excluding CWT, organic growth was 8%, supported by stronger business travel demand and share gains. Leadership emphasized AI as a major growth lever, with digital transactions rising to 83% of total volume. The company plans to launch Agencia AI, enabling natural language booking and policy-compliant travel management. Executives framed automation and AI as structural tailwinds that will further streamline operations and enhance traveler experience. Let's get to the news of mergers and new partnerships. Zoox has partnered with Uber to deploy robotaxis directly through the Uber app, marking Zoox's first third-party platform integration. The service is set to launch in Las Vegas this summer, with expansion to Los Angeles planned by 2027. Zoox vehicles, purposely built without steering wheels or pedals, aim to deliver a differentiated autonomous experience. While rides are currently free in limited markets, commercial deployment will require regulatory approval, including exemptions from federal safety standards. The partnership signals Uber's continued push into autonomous mobility while enabling Zoox to scale distribution through an established global platform. Bilt has acquired commission management platform Sion for $30 million to enhance its travel rewards ecosystem. Sion specializes in commission reconciliation for travel advisors and agencies and will continue operating independently post-acquisition. The deal allows Bilt to extend its platform into travel advisor workflows, offering tools for booking management, payment tracking, and automated commission processing. The companies also plan to improve invoice automation and reconciliation accuracy. Strategically, the acquisition positions Bilt to build a more integrated travel and loyalty network, strengthening its value proposition for both advisors and members through enhanced operational efficiency. ITA Airways and Trenitalia have signed an agreement to develop an AI-powered intermodal travel ecosystem across Italy. The partnership focuses on integrating air and rail services through a unified digital platform, improving connections between airports and train stations, and offering more personalized, sustainable travel options. Building on their existing air and train ticket, the companies aim to simplify booking and journey management. A key component is the creation of an AI intermodality and sustainability lab, which will develop solutions for demand forecasting, travel flow optimization, and emissions reductions. The initiative reflects a broader industry shift towards seamless, data-driven, multimodal transportation. Archer Aviation has partnered with Starlink to equip its midnight electric air taxis with high-speed connectivity. The integration will support passenger internet access as well as real-time communication between pilots and ground engineering teams. Archer also plans to leverage Starlink's capabilities to advance development of its autonomous flight systems. The Midnight aircraft is designed to provide a fast alternative to ground transportation, particularly for airport transfers. The partnership underscores the growing importance of connectivity in next-generation aviation and aligns with Archer's broader strategy, which includes backing from major airlines exploring urban air mobility solutions. And now news of new travel services and improvements. The Federal Aviation Administration has approved 8 pilot programs enabling companies like Archer Aviation, Beta Technologies, Joby Aviation, and Whisk Aero to begin expanding electric aircraft testing as early as this summer. Spanning 26 cities over 3 years, the initiative aims to accelerate development of next-generation aircraft for passenger, cargo, and medical use. While full FAA certification remains a lengthy, multi-year process, the program allows pre-certification testing to advance commercialization timelines. Backed by a federal push to position the U.S. as a leader in advanced air mobility, the initiative could significantly boost industry momentum and investor confidence in emerging eVTOL players. Plaza Premium Group has opened its first U.S. Plaza Premium First Lounge at Dallas International Airport, marking its entry into the high-end lounge segment in the U.S. market. Located in Terminal D, the lounge offers elevated amenities, including sit-down dining, table service, showers, and private relaxation areas. Access starts at $115, with discounts for Priority Pass and eligible American Express users. The launch reflects intensifying competition in the premium airport lounge space, where airlines, credit card companies, and independent operators are investing heavily to attract high-value travelers seeking enhanced pre-flight experiences. India's aviation regulator has introduced new passenger-friendly rules allowing travelers to cancel or modify bookings within 48 hours without any penalty. The guidelines also permit free name corrections within 24 hours for tickets booked directly with airlines. Additionally, airlines are encouraged to offer refunds or credit shells in cases of medical emergencies affecting passengers or family members on the same booking. The changes follow criticism of airline practices, including price surges during disruptions. The revised framework aims to improve consumer protection, increase booking flexibility, and restore trust in airline systems amid growing scrutiny of customer experiences in India's rapidly expanding aviation market. Billy Bishop Toronto City Airport has introduced a U.S. Customs and Border Protection pre-clearance facility allowing passengers to complete entry procedures before departure. This enables travelers to arrive in the U.S. as domestic passengers, streamlining connections and reducing wait times. The development also opens new route possibilities, including service to airports without CBP facilities, such as New York's LaGuardia Airport. Air Canada has already announced new routes leveraging the capability. The facility strengthens the airport's competitiveness and joins a network of select global pre-clearance locations, enhancing cross-border travel efficiency and expanding operational flexibility for airlines serving U.S.-bound passengers. Car rental company Sixt has launched a new loyalty program, Sixt One, across the U.S. and key European markets, replacing its Advantage Circle program. The system introduces dual point accrual, status points to unlock tiers, and rental points for redemption based on customer spending. Members are assigned tiers ranging from silver to diamond, with increasing discounts and earning multipliers at higher levels. Existing members can retain status under certain conditions during the transition. Early adoption has exceeded expectations, with hundreds of thousands of signups reported. The move reflects Sixt's broader strategy to enhance customer retention and competitiveness in a global mobility and car rental market. Thank you for joining us today. Be sure to tune in again next week on Monday to get your weekly update. We hope that you will make this a regular part of your week and listen in while you're on the move or sitting back and sipping your coffee. Be sure to share this podcast with everyone that you know so that they can also benefit from getting to know more about what's up in business travel. Remember to subscribe to this podcast by searching Business Travel 360 on your favorite podcast music player. You can also listen at businesstravel360.com. Have a great day and travel well.